Boom. What's up, you guys? It's Royce Jacob, and welcome back to another members exclusive video. In this one, we're going to be talking about a stock that I was very bullish on in 2024 and that I remain bullish on in 2025. This is a stock that is currently one of the largest positions in the entire Waves portfolio, call options and common share positions. And this is a stock and a company that I believe will absolutely smoke earnings on February 6th. This stock is, you already know what it is. It's super obvious because it was in every single title here. This stock is Philip Morris, or ticker symbol PM. We traded this extremely well. This was actually one of our best trades of 2024 in the Waves portfolio back in April when we first identified that ZYN trend and played really that first earnings report that reflected the explosive qualities of ZYN. And I think that they're going to do the same thing in 2025. So we're going to read over this article first, go over a few reasons that Goldman Sachs, Mr. Sachs, believes, obviously the bank Goldman Sachs, sees 20% upside in Philip Morris. We're also going to go over just the average analyst estimate, just go over some of the bull and bear scenarios from a fundamental perspective. But based on the tone I have around this, based on the contents of this video and the headline and everything, call options. You guys know that I'm bullish. You guys know that I think that this stock is evidently has more room for upside. And I actually think it has way more room for upside than just 20%, because I think that this stock is very undervalued considering this is a growth stock. So we're going to talk about PE ratio. We're going to talk about price. We're, of course, going to talk technicals. But let's go over some fundamentals first. Let's read over these headlines, okay? So before we read over this article, it's not super lengthy, but there's a couple paragraphs we got to read. I just want to go over these headlines that I shared in my most recent newsletter. And this first one is from Axios. So this is a big deal, and this is the primary reason that Philip Morris did bounce back, and that we saw a technical breakout rally to almost 2% on Friday, the Friday before recording this, January 17th. And I think this is to thank. Okay, so the Food and Drug Administration on Thursday authorized the marketing of ZYN nicotine pouches, citing extensive scientific review. Why it matters: this is the first FDA authorization of any nicotine pouch, though that does not mean the product is FDA approved. Okay, this is super, super bullish, especially because there was a lot of contention around this issue, kind of similar to Juul. If you guys were at all familiar with the Juul situation, I don't want to assume that, but any nicotine-related product, will face some scrutiny, especially because ZYN is, the Nelk Boys shouted out. It's becoming, the reason I traded Philip Morris in the first place, again, in last April of 2024, is because ZYN was exploding everywhere around the cultural zeitgeist. And that's the same way I identified AI back in December of 2022. It's just look around you. I think I just saw this. I wish I probably shouldn't have even referenced this because I can't remember. It was a CEO of some prominent brand, and what he said was just look at what the kids are doing. And that's not exactly what I correlate this to, but that's the same example I use when trying to identify the next trend in the capital markets. What is going on around you? What are the cool people doing? What are the cool kids doing? Okay, we'll just say that. What are the cool kids doing? What is popping off on YouTube? What do you see people talking about? ZYN was that example. ZYN continues to be that example. And especially after Philip Morris's recent correction on the charts. And again, the PE ratio that I believe is significantly undervalued for the fact that this is a growth stock. That PE ratio, I'll just say now, is 19 on the dot. It's nice and satisfying. So a 19 PE ratio for a stock that is emitting hyper growth qualities and hyper growth prospects. I mean, this stock is way more of a growth stock than Apple, in my opinion. And Apple, you guys know I'm bearish on Apple. I was actually just going to make a bear video on Apple, but I decided not to because I just didn't want to. I don't feel like bearish. I didn't feel like making a bearish video. I wanted to make a bullish video, so I made this because I'm super bullish on Philip Morris. But Apple trading at a PE ratio of 40, insanely high. And Philip Morris, which is, again, due to the explosive growth in ZYN, their IQOS products, super bright future for the stock. And I think this can actually see multiples, not just percentage gains, but multiples in revenue over the coming years with these products at the top of the spearhead. at the spearhead. Okay, so let's read over this. And then we'll dive into the charts, and I'll talk to you guys about why this is looking technically promising as well. Philip Morris shares have more room to run as the Marlboro maker continues to shift its focus from cigarettes to smoke-free products, according to Goldman Sachs. Analyst Bonnie Herzog has a $150 price target on the stock, which implies shares can jump 21% from Tuesday's close. Herzog also reiterated her buy rating and called Philip Morris a top pick heading into 2025. Quote, PM is transforming into a faster growing and more profitable business, an earnings compounder with an attractive valuation, Herzog told clients in a note Wednesday. Bottom line, we believe many investors are not sufficiently appreciating PM's improving, accelerating fundamentals and its compelling valuation. I couldn't agree with you more, Bonnie. And when we look here, you can see that Philip Morris is, of 15 total analyst ratings, you can see the average price, which I like to look at, because it's obviously the most unbiased, is 137. Okay, so that implies upside from here of 13%. Okay, and this actually falls pretty nicely in line with some of the targets that we'll talk about here. Okay, but overall, average price target for a stock, once again, that is conservative, that tends to also thrive when tech stocks sell off, which given my bearish implications on Apple, I think is a very real possibility. I think the NASDAQ could definitely sell off, or Apple. And I do think that that outflow of capital will flow into not only small caps and the other names within the Waves portfolio, but also names like Philip Morris, great dividend yielding companies. Okay, 4.4% dividend yield is insane for a growth company like this. PE of 19. Again, all of these fundamental, yes, partially technical, partially fundamental, just these under the surface attributes of the stock that make it so incredibly appealing, especially given the growth rate it's seeing with, again, it's growing fundamentals, as she just said. Okay, so Herzog said she is incrementally bullish on Philip Morris achieving long-term double-digit percentage growth in earnings per share. That comes as the company attempts to see 2/3 of its business tied to smoke-free products by 2030. The potential smoke-free market in the U.S. increases Philip Morris's total addressable market by some 60%, according to Goldman Sachs' estimates. Herzog said the company could expand the business mainly due to two products. First, ZYN, and the second, where Philip Morris... ZYN has become is she going to talk about what the second one was? Herzog also said Philip Morris shares will benefit from the domestic debut of heated tobacco, that's the IQOS products. In addition to the Illuma rollout, she pointed to the possibility that fourth quarter earnings will top expectations and the likelihood that initial fiscal year 25 guidance is robust as additional catalysts for the stock in 2025. Okay, so sorry, that's a little sloppy at the end there. Point is, ZYN through the roof. Those IQS products, which is that heated tobacco thing. Not familiar with that personally. I've popped ZYNs before. I've never touched those heated tobacco things. Interesting product, but again, smoke-free. This just falls in line with just the general health trend, which is great. General health trend that's going on. And I mean, ZYN itself, nicotine, super, and this is kind of been on the rise for years, this train of thought or belief, which I definitely subscribe to, but ZYN, it just makes me too buzzy because I drink like 6 cups of coffee a morning. Nicotine as a nootropic or nootropic, however you want to say that. Nicotine as a nootropic is definitely only more people are going to believe that to be true. And that's only good news for ZYN. Okay. And again, smoking a stogie, the net effect of that is a net positive due to all the toxins that are in the freaking cigarette itself, okay? But, pop a ZYN, I'm not going to say it's safe. Like, similar to Juul, I would say just having smoked a cigarette and smoked a Juul, clearly less harmful to your body than cigarettes. That's why Juuls and vapes are on the rise and cigarettes are down. ZYN, significantly better. I can say that with confidence than both of those alternatives. And I do think that trend will not shift. Okay. I cannot see people swapping back to stogies, or just, if you're starting a ZYN, that's not the evolution. That's not the evolutionary process. You don't go from ZYN to stogies. Okay. So technically Philip Morris looking super promising. You can see here long-term that Philip Morris perfectly reversed. Let's go to daily. Now we can stay 4-hour candles here. You can see here that Philip Morris perfectly bounced off of this line of long-term support on this massive ascending borderline megaphone channel. I do think that following this breakout of short-term resistance right here, that's a climb to test the line of previously broken medium-term resistance. Sorry, there's a lot of trend lines here. Previously broken medium-term support is going to be the next area where I'd look to potentially skim a little bit of profits. Again, I have a relatively large position on Philip Morris, call options and put options. If you're not a member of the portfolio, what are you doing? If you want the daily newsletter, you want the daily portfolio, you want my trade alerts, first link in the description of the video. Join the winning team, my complete portfolio, daily trade alerts, email newsletters, everything that this box here entails. Pick your pricing plan, $15 a month, $40 for every 3 months. If you are a member, thank you. Let's keep this momentum alive. But if not, again, what are you waiting for? Go sign up. Okay. So all of that being said, Philip Morris looking promising. My next target as far as some short-term profits may be concerned, like skim some profits, definitely keeping a lot of call options on the table and all of my common shares on the table through this earnings report, given my bullish sentiment, as I just implied. And I do think we rally much higher than that. But skim some profits here. Yellow line, $1.25, just 2 to 3% climb from current levels if we see it prior to the end of the month. But again, following that earnings report, which I think they will smoke expectations. I think this earnings report will be amazing. I think guidance will be great. I think that we ultimately climb up to test this line of conservative long-term resistance. Okay, so this is a very conservative line of resistance. I can actually draw here conservative. I'll say this is actually like non-conservative resistance right here. This is like optimistic absolute resistance, which I still think is really possible as well. And you know what? Traders are going to be looking at this as well. So that's realistically, these are all trend lines that I think are going to be in play. Okay. So following the breakout, my first target is going to be this line of I would say very conservative, to be honest, resistance on this long-term uptrend. That comes to about $1.35. Which once again falls pretty nicely in line with that average price target at $1.37. Okay, so $1.35 I'll say is my first major profit target. That's where I'll reap pretty significant profits in the case that we do see that. From there, I do think that a trip up to one of these lines in this area, I do like to see these intersecting, like converging trend lines, longer term trend lines here around this yellow and blue line. I wouldn't be surprised if Philip Morris again does climb 20%, close to what Miss Herzog was saying here. I assume it's a she because her name's Bonnie. Maybe it's a guy named Bonnie. Whatever. Either way, Herzog said 20% up from current levels. That doesn't surprise me at all. I think it was a little higher when that article was written because that article was written a while back. But ultimately, I think $1.45, $1.50 is very possible. And best case scenario, if we do test this line of long-term resistance, like absolute resistance, I will say, that would be by March. That would lead us up to $1.55, which again, given Philip Morris's prospects and given its PE ratio and given its dividend yield and everything we just talked about, I wouldn't be completely surprised if that happens at all, to be honest. Okay. Especially if capital starts to flow out of like stocks like Apple, the big dogs, like the overvalued tech titans. This is a very, very obvious place to put capital work, in my opinion. Okay. So super bullish on Philip Morris. I'm excited to see what happens here. I'm excited to ride the waves, that hopefully come before and after this earnings report. And I'm excited to make some money with you guys. Appreciate you watching. Let me know in the comments below what you think about PM and just everything we just discussed. And, I'll see you down there. Until next time, always remember, take action, make waves. Peace.